Alright, so today we're going to go over some swing trades that might be triggering next week, and as well as the current situation of some of our swings right now. So we're in a few, well, more than a few swings right now. The first one we're going to talk about is DFIN. We got in over this breakout here, set our stop right below this candle here, and we're waiting for it to trigger off. And you'll see that on each of these slides that we're in currently, I'll have a little text box saying when the earnings are. So this earning is in about 2.5, a little bit less than 2 weeks now. So we have that much time to either hit our target, get stopped out, or we'll just close the trade before earnings. We do that because earnings are very unpredictable. Even on good earnings, your stock prices could drop for no reasons. It could gap down well below your stop loss. It could gap down all the way down here. Who knows? If we gap up, but I don't like to take the risk. Earnings are just way too volatile, so usually I exit beforehand no matter what. You'll notice that my risk here is pretty low. It's mainly because when I got in this trade, I was pretty low on funds at the time. So that's why even if I get stopped out at this one, even if I get stopped out on this, our loss is not going to be that heavy, mainly because I had capital restrictions at the time. Our second trade we're still in is GPRE. When I initially wanted to get in this one, I actually didn't have the money at all to do so, which is essentially the breakout of this with the stop below here. When I came back to finally look at this, the stock was still kind of in a range, which I didn't really mind because it never actually stopped you out. Pretty much I see that it's going to keep going up, in my opinion, even on the high volume selling days. It never broke the stop loss, and it kind of set a new low here, or a new higher low here that I liked. So I got in on this day, and I'm just going to hold this out until earnings, essentially. Next one is Garmin, GRMN. This is a little bit different than my usual strategy. The usual plays that I like to take is kind of shown on something like RHI, where it has a strong move up and then it consolidates into a range for a little while and then it breaks out again. So I basically have to trade breakouts to consolidate to either moving average or just for a long period of time after a strong move. The difference between my conventional breakout swing trades and the Garmin ones I've been trying out lately is that this one's just a strong move up and then it just kind of collapses back down to some kind of natural resting point, and it puts in kind of a double bottom W shape pattern, and then when it breaks out again, I'll take the break of, I guess, what would you say, the classic W. So we'll see how this goes. This is one of the first times I've traded this pattern. It's on a much lower risk level, so we'll see how that goes. Essentially, I got in over this candle's high, and I set the low right here, and then hopefully my first target's going to be the first pivot here, and then the all-time highs back there. My second one, but as you can see, we only have a couple more days to either hit our first target or get stopped out. Either way, I'll close it before the 27th actually hits. I forget if it's before open or after, but I'll make sure to check beforehand. Our next one is HMHC. This one we're a little bit underwater on, but that's all right. I like this one because it's pretty much sitting in this range for a long period of time. And it pops up. I think this is the day that I actually liked when it popped up on the candles here. And it just came back into the range, but it never got close to stopping out or even close to the bottom of the range again. So that's why on, I forget what day it is, in one of the market pullbacks, I decided to get in with a target up here and a stop below this candle, so 1285. We'll see where this one goes. It only has about 2 weeks left in it anyways, and if it doesn't, then the losses should be minimal. RHI, this one I talked about previously. We're very close to hitting target on this. I think we were, what is it? Within less than 50 cents of hitting this, pretty much 50 cents of hitting this target on Friday. This is our first target, and our second target's up here. We have until next week to close out, but essentially this is a very good example, a pretty good example of the pattern I'd like to trade. Strong move up, consolidation phase, and then it breaks out again. Yep. WCC, similar as the other ones, like I said, a good breakout to the upside and it consolidates into a smaller range, narrows up, and then breaks out again. So this one, we also have about 2 weeks before it hits. So far, looks pretty good. WNS, another one that kind of follows a similar breakout pattern. The only issue with this one that you guys might see is that the volume is much lower. So that just means that we might, when we get stopped out, we might take a bigger loss because there might be a good amount of slip. The main reason I like this one, I just got into this one the other day, is because as it's narrowing into the top part of the range here, the volume increases dramatically. And as you see on that, like the biggest ranges on this day, on the 19th of October, and then the following day is when it starts to break out. So that flood of volumes will kind of set off this breakout. So I got in on the retest because on the initial order that I put in, I didn't get filled. I completely got skipped, which is pretty normal for something with such a low daily volume. But right now it's even though it pulled back on the following day, it didn't do so on high volume. So I'm confident that it'll put in a little bit of a move before I have to get out on earnings. So I only have about 5 days. So by the end of next week, I'll have to close out. But even before that, on Thursday of next week, I have to close this trade out. Zim is another one that's kind of like Garmin. It puts in a very nice move to the upside and then comes back down. The one I like about this one better than Garmin is that when it kind of finds this new bottom area here, it puts in a high amount of volume, which tells me that all the sellers that want to get out at the top here are kind of gone now. And it's kind of time for the buyers to step back in. So we'll see. I got at the top of this range here, and then hopefully it gets back to at least this pivot. I have a little bit longer on this trade. I have, I think, 3.5 weeks or so to get out of this trade. So this one has a little more time. I also like that it didn't set a dramatic new low. It's kind of sitting in this initial breakout range that I had. Even though it rolled over to begin with, it's kind of holding inside that range. So we'll see. This is a new thing for me. I'm not, there's not a lot of money riding on this trade. Here are some trades that we took. This is one that we've actually hit target on during this previous week. As you can see, it's very similar. A nice little move to the upside and then consolidation for, what's that, like a month and a half consolidation before it does the second move. So we had our first target, second target, and now we're completely out of this trade for, I don't know, $300 some dollars. RWT, another one that we hit this week, our first target anyways. So very similar, very good move to the upside and then consolidation. This one's consolidated for, I don't know, 3 months before we saw another move. So inside this range to the upside. And I'm waiting for my second target here. So far we've closed out, I don't know, 1.5, and we're waiting for another 1.5. So potentially another $200 on this. We have about half of that closed up right now, or opened up right now. And then we'll move on to the trades that we're looking at. Nothing that I'm dead set on, but DAR, Darling Ingredients. I'm looking for this to touch this top range one more time. Maybe put in another little pullback to $74, $75 area before it takes off. This one's a consumer staple, I believe. So I'll compare it to the sector, the consumer staples sector, and as you can see that this chart, the big pullback on staples didn't really affect DAR. So I like that it has relative strength, and again, this is all-time highs area, so it's consolidated for, since March, it's hit these highs, and it's kind of sit inside this big range here. So it tightens up a little more. I'll go and take this in a week or two. It's kind of rested back to the moving averages, which I like to see, but I'd also like to see an increase in volume right before we're about to break out. So we have maybe another week or two on this, but we'll keep watching it. EQR, it's a little bit sloppier, but it's very similar to what I'd like to look at. I'm not dead set on this one just because it's a little bit weak to the real estate sector. So you can see the real estate sector is kind of running up, and this one's EQR is not really reacting, even though it pulled back at the same time real estate did. So this one's just a pure watch for now. If it tightens up and real estate sector pulls back, then I'll be interested. Otherwise, I probably wouldn't touch this one. Kind of similar to ESS, this is also a property trust, kind of like the other ones. This one buys property on the West Coast in California, I believe. So again, I'm watching it in association with real estate. So if real estate pulls back now and ESS stays in this upper range, I'll be interested. I'm also looking for an influx of volume at some point. I'd like for it to pull back again, maybe to, I don't know, 329-ish area one more time. But if it takes off now, then I'll just let it go right now because I don't see much relative strength to it. HSY, another one I'm watching. Hershey's company. This is another kind of consumer staple, so I'll compare it to that sector. So in that regard, it's a little bit stronger. But again, I would need to see it pull back one more time, probably to this area again before I'm interested. I see the volume spike here. It didn't lead anywhere, which is fine. Yeah, so in a week or so, if it pulls back a little bit and stays in this upper range right here, I'd be interested. Noodles and Company, another one that I'm similar as DAR. It's kind of in the consumer staples, so it's put in a much better consolidation in the range than this. It hasn't been really reacting. Kind of just sitting at this top here, which I have no problem with. The only issue I see is that it's a generally downtrending stock since it came to inception, and now it's coming to areas where in the past it's found sellers. There's just some issues here that I don't love. So in order for me to take this, I need to put it in a tighter range so that I'd have room to 1423 beforehand. So as it currently stands, I don't have enough to make 1R or 1R's move before it runs into resistance. So this one I'm watching, but I'm not eagerly jumping to get into. NTAP, NetApp. I like this because generally the same thing. It moves up into the upper. It makes a good move to the upside, puts in a range on good volume. Now it's just kind of hanging out. This is a tech company, so I got compared to NASDAQ. And I guess NASDAQ is relatively strong. It didn't super react to the like what 4, 5, 6 days of green bars we've had recently. So this is another one I'm watching. Not ecstatic on, but I'm watching. I think the one I like the most is probably DAR, to be honest, just because it's consolidated after so long. TRV is an American insurance company. So I like this. It's been in this range for, since March. It's been in this general area compared to, that's not right. There's a real estate, which looks like, yes, this is the insurance sector. So you see the insurance sector is kind of booming in the past, like, I don't know, month or so. It's just kind of straight up. TRV has, not really reacted much. It hasn't put in new highs, but that's fine. Because if the insurance sector pulls back now and TRV stays in this upper range, so let's say it stays, above 155, I don't want to put a new low in. So if it stays around 155 area after touching this line again, I'd be interested in taking it. So probably another 2 weeks on that, another week or so. Yeah, week or 2 weeks. That's what I'm watching. And then the only short idea I saw, which I kind of like, but I have my hesitations on, is KMB, which is Kimberly Clark. I think that people make like toilet paper. It's sitting right above this level of support, which is fine on the daily chart. When you look into the weekly chart, you'll see that it has some issues. So first, it's starting to bump against the 200 moving average, which is a place where people like to buy. Essentially, they'll think that it's rested enough, it's getting a little detracted, and they'll like to buy it on 200, which we've seen before because every time it's gotten near this area, it just kind of bounces up and down. So bounce, bounce, bounce again. Even on this last week, it just bounced hard. So if it breaks below this, I think it can go a lot lower, but only to maybe about this area, so like 120, 123 area. So you'd have to have a relatively tighter stop if you want to take this, which I don't see particularly forming. The best stop I could find is probably right above this candle. So 136 by, or 130, no, 128 by 136, that's $8 stop, and you need $8 to even get 1 R out of this. So getting back to 120, I'm not sure if it'll happen. The only thing that I do like, the factors I do like about it is that it's much weaker than the sectors it's in. So you can say that it's in the paper sector, which case it's much weaker than this. You could say that it's in the industrials, which is much weaker than that. So either way you look at it, it's not the strongest. So I wouldn't mind shorting this, but I'd had realistic expectations to not get a full R out of it. We might be able to scalp a small trade. The only thing I wrote on here is that earnings. Did I write this? Oh, I guess not. Yeah, earnings on this is next week. So, if you can get it, if it gaps down and it rolls, it might be more of a day trade than a swing trade. So we'll see. If it stays range bound here, even after earnings, and it puts in a little bump up to the upside, and then you have a little bit tighter stop, then you can consider it. But generally there's not that many shorts I'm looking at. When you look at the SPY, it's just kind of it's an uptrend. You don't like shorting things in an uptrend. So the SPY and the NASDAQ generally just an uptrend. I'm not eager to short things here, so just consideration. And I know that people will say that all I do is show wins, or it's not profitable. So I'll show the two most recent losses that I've had, which aren't many because the strategy is generally pretty profitable. But we'd seen this put in a range here with I would put the stop initially here, but since I missed it, and I guess I was looking into getting swing trades, then I wait for the smaller range above this breakout to lead to another breakout, and unfortunately it rolled over. So if we put our initial entries around this on this 493, 490 area with a stop, the original stop 462, we'd still be in this. It'd still be a good trade, but eager, and took a secondary breakout after breaking out of this range. I was a little bit eager. And the second one was HZMP, which is their previous company. Essentially, same thing. Good move up, and then at this point had a lot of relative strength to the NASDAQ because the NASDAQ was actually pulling back for a couple of days. And this is just a case where you put your stop under this big red bar here, and then you barely get tagged out by like $1 or 50 cents, whatever it is, and then it just takes off again without you, which is fine. What happens? You can't win them all. Anyways, this is what I've seen for the week. If you've seen anything else, let me know right in the comments because I'm always interested in what other people are taking. Thank you very much. Have a good one.